Hey traders, checking into the stock market today. So we had a bullish move into the open. We had a small gap up open and the bears absolutely feasted on that gap up. We have a lot of little lessons today and I explain them in a unique way at the end of the video. So make sure you stick around. So the bulls made their move pre-market. The S&P 500 futures had the resistance level, the double top from yesterday. It was a bull flag this morning, very healthy consolidation. And the bull break took place. This ended up being a big fake out, but it was a gap up open. And for those newer to this channel, gap ups are for selling. They are not for buying. I will never buy. The only time I'll ever buy a gap up open is if the market has just been giving some kind of news that is not even close to being priced in. For example, if the DEA were to reschedule cannabis overnight out of the blue, I would buy cannabis stocks on a gap up open. If we were to see the Fed say, man, we're not going to raise rates anymore this year. If that was the news right before the open, I would buy a gap up open. In the absence of those extreme scenarios, I do not buy a gap up open. The probabilities are not in your favor. The risk and reward is not in your favor. It's the time to be locking in some profit, and it's the time for aggressive bears to be looking for entering positions, especially the last 2 months. If you look at the last 2 months and the gap up opens, they generally, we don't gap up and then run away. And if we do, that's the kind of thing where I just wave and say, see you next time, trade. That was not the setup I was looking for. The risk to reward was not ideal, and I am not going to chase. So we ended up in a scenario where we dropped all morning, and when you start with an overbought RSI, you can drop massively before you get oversold. SPY's 15-minute RSI hit 80, and then we dumped all morning, and this is a big dump from those highs. Percentage-wise, that is 1.75%, and the 15-minute RSI only just barely got oversold. We had a nice bounce off the 4-hour EMA 12 with 15-minute oversold conditions. I talked about that in the video yesterday, so it was a nice little example of that. But overall, the bears in complete control of the day. So what does this look like on our futures chart? It looks like an upper wick with a lack of follow-through, and we have to be cautious of bears being exhausted. We know that when we see breaks with a lack of follow-through, we scout rising wedges. So here we can scout a rising wedge on our futures chart. And I would be looking at that right there. So on any bounce, we're going to be looking for an hourly lower high. And we actually set one on SPY today. So anything under 439.25 would just be an hourly lower high. Pretty much a double bottom at the low of the day into the close. But obviously, bears had momentum on their side for the day. We can certainly say that much. QQQ, gap up open, headed all the way back down to the low of yesterday. We held it by 11 pennies, but the bears controlled the day. And we can see QQQ is weaker than the S&P 500 because we set the hourly lower high and the clear lower low into the close. We can now say anything under 346.65 is just an hourly lower high, keeping those bears in control. And there were a couple instances today where 1-minute stair-step patterns were good bear entries. We had a news reaction where first we had the move off the low, stair-step pattern breaks bear at 344.09, and not a huge amount of follow-through, but enough to position at worst to be risk-free. Again, when we see a pullback here, if I enter bear at 344 breaking and I put my stop over 344.40 to give a tiny bit of wiggle room, I will exit half that position as soon as I can be break even. So if we drop down to 343.60, I am out half of that position and I now cannot lose. And in the end, I would have either gotten stopped out or locked in some profit. I didn't trade today, but that happened multiple times. And the point I want to make is here was a news reaction to Russia and Ukraine doing a third round of talks. And again, the stair-step pattern, just a straight shot up. If you do not change the trend, you don't believe the move, counter trend, counter momentum. That bear break was 345.89, and we dropped down $1.80 or so from that point. And then there's one more at the end of the day, 1-minute move straight off the low, never change the trend. My point is, as long as you see these big, fast, not even that big, but fast bull moves counter direction on a directional day that does not change any trends, bears will continue to enter bearish on those moves as long as it keeps working. And it has been working a good bit in this weaker market environment. So recognize that. if I'm playing a bounce and I see that happening, I'm more prone to take some off the table because we're not establishing trend changes. It's just a fast, hard move with zero follow through. So bigger picture, we are watching to see, do bears follow through now? Do we break the little double bottom on QQQ from the last 2 days? 340.24 would need to break tomorrow for bears to prove some follow through. Checking in on the NASDAQ futures chart, do we have the same kind of rising wedge? And it broke bear as far as I'm concerned. As soon as I saw that the bull break with no follow through, I draw the rising wedge. And the big red flag here was this support level breaking, because then you lose the higher lows. You can pull back on a gap up. So a gap up doesn't mean the bears are going to control the day. It means watch for consolidation, but oftentimes that gap up consolidation is just an hourly higher low, and then the hourly uptrend continues. But if you see the gap up open and then you lose the uptrend, that's an extra red flag, which is what happened on the NASDAQ. SMH, failing to break daily resistance. So 270.86 is the top of this move, and we did not break it. And if we drop down now and break 257.12, we're looking right back at our fear low. So we can say that the semiconductors are weaker than QQQ because QQQ got that higher high, granted with no follow through, but SMH just keeps giving daily lower highs at this point. NIO, I stopped out. I gave back my bounce profits from yesterday. So in the video yesterday, I detailed how I played the oversold bounce and ended with a swing position. And again, I wasn't trading today. It was too nice out. Wanted to be outside a lot. So I stuck a stop under the low of yesterday, which was risk-free because I sold enough on the bounce yesterday, but I gave back the profits from yesterday by stopping out. I made an attempt for the daily higher low. Obviously, the daily higher low did not form, and NIO is one of the weakest names out there today. Whenever NIO stands out stronger or weaker, I always check with the Chinese names. Was Baba weak? Yeah. Was Baidu weak? And I checked growth names. And it was just a double whammy where Chinese names were really weak and growth names were really weak. And NIO fits into both those categories. So it was just a lot of downward pressure on NIO, which closed very weak. And NIO is looking back at our fear low of 1847. It was down almost 9%, whereas Tesla was down less than 5%. So a fairly big difference between the two. Tesla's daily chart looks way different. It could still be a little bull flag if we look at our retracement sizes with Alt-F and our magnet. So still a possible bull flag, and obviously NIO is not. Healthcare was the lead bull today, continuing its bounce, weekly resistance 134.46, but we know healthcare does not matter as much in terms of the weight in the broader market. So that's part of the reason why SPY was not as weak as QQQ today, because XLV was holding it up a bit, and XLF was also nowhere near as weak as QQQ. So what I've been noticing over this week now, today was day 4 of trading this week, we have really it's growth in QQQ on one side and XLV and XLF on the other. And there have been days now, multiple times, where we have XLV and XLF stronger and QQQ weaker, QQQ stronger and XLV and XLF weaker. So I just view it as these are two teams and there's a pair on each team, and I'm just watching the relationship between these different sectors. And right now, that's how the pairing is taking shape in my mind, and it's not always the case. But this week, that has clearly stood out to me. So XLV up 0.5%, XLF down 0.3%, but neither anywhere near the 1.4% weakness drop in the QQQ. XLF, so bounce follow through, but again, we have not changed the hourly trend bullish. So that always is important to me. You need those trend changes. As far as I'm concerned, well, you know what? I take that back. You can call this the move from the low to the high of yesterday, and we did form a little bull flag at the end of yesterday, and we did see a higher high at the open. So you can say that little bull flag confirmed with zero follow through. Now the question is, can bears regain the downtrend in their favor? They would have to break the low of today, 37.62. To do so, if they confirm the hourly downtrend, our new daily lower high is set, and we're looking right back at our triple bottom fear low. If the bears don't confirm the hourly downtrend, the bulls are going to try and keep this daily bounce going, and daily EMA 12 resistance is coming into the picture as well. IWM, double top, right at the high of yesterday. First thing, we failed by 19 cents, and then we broke the low of yesterday. The key level for me, the line in the sand for support, is 197.80. The bulls will keep the uptrend if 197.80 holds. It's obviously an initial red flag to us to break to a higher high straight into consolidation, but the bulls still have a chance to save it if they can hold 197.80. Keeping in mind, bigger picture, weekly, anything under that level is just a weekly lower high remaining within the tightening weekly range. Biotech sector rolled over for the bears, just like IWM with that top fish first thing. Bears failed to break the high of yesterday by 20 cents. And then we rolled over. So daily lower high very clearly set at 91.36. And it's all about the fear low of 81.71. Do we break it and continue the downtrend, or can the bulls hold it and confirm the trend change? Those are the only two scenarios from here, and we have already retraced 50% plus. So the bears are still confident as long as these daily lower highs keep forming. We know the burden is on the bulls. Solar sector pulling back. I'm starting to get interested in looking for a daily higher low. We did not see hourly oversold, so I'm remaining patient. Dropped to a lower low with a lack of follow through at the end of the day. We don't necessarily have to see hourly oversold, but on a weak market day like today, if the trade's going to come to me, I'm going to be picky, and that's what I'm looking for. I'm also watching the gap fill at 66.45, and I'm watching daily EMA 12, which is coming into the picture as well. We still have tons of space to form this daily higher low, and again, as long as daily EMA 12 holds, it's a potential daily bull flag. So this is one of the names where I am still keeping an eye out for a daily higher low entry. Oil, 4-hour head and shoulders watch. So a lot of pullback today. There was a news reaction to Iran doing something with their oil. If you care, look it up. I don't care enough to know the details. I just know there was Iran news. So we've got anything above 105.18 as a higher low. And if that level holds on this pullback, it'll be there's a nice amount of space for bears to scout a 4-hour lower high next bounce. What's the difference between the last period of consolidation? The size. This pullback was a bull flag. We pulled back 6.5%. We held EMA 12 support, and then we saw continuation. On this pullback, we've pulled back over 8%, 8.5%. So it creates more space for a 4-hour lower high to be the most likely result of the next bounce. So keeping an eye for a 4-hour lower high. And then the bears have to confirm it, of course, for us to zoom out and scout daily consolidation with tons of space for a daily higher low to form. And we'll be watching backburner trades after this oil breakout. Aggressive bulls are scouting first hourly oversold conditions. More patient bulls are scouting first 4-hour oversold conditions, which aren't even close to taking place. But it all depends on how picky you are as a trader. Nothing wrong with being picky. Less trades can be good, especially if you are putting yourself in more ideal scenarios. Oftentimes, I see newer traders, one of their biggest mistakes is over trading. And if you have a more strict and picky criteria and you're taking less trades, if I were to wait and say I'm only going to trade backburner bounces on names coming off blue sky breakout, my win probability would be very high. But there would be significant periods of time where I just don't have any trades because those criteria are not being met. Silver. So silver rejected from resistance, and that decreases the probability that this is a cup and handle. That being said, it is still possible as long as 4-hour higher lows remain. So if we hold 24.85 here, it's another 4-hour higher low. And at this point, it's essentially just turning into an equilibrium. And if we set the higher low, we're going to watch our resistance levels. So again, failing here, bulls would have preferred market weakness to lead to the inverse relationship we've been seeing recently, and for that to lead to a breakout in silver. And obviously that did not happen. So as soon as we reject and start pulling back, the probability of that cup and handle setup decreases. But again, it's not off the table at this point. So sideways range, and we should break before the end of the week. What do we got? 24 hours, which means 6 more candles. So if we were to bounce and get some follow through, then maybe another lower high. So I would expect a break before the weekend. It is possible to remain sideways until the weekend, but we'll know a lot more tomorrow pre-market. Crypto names. So Bitcoin pulling back today into more convincing daily consolidation, and our crypto names are as well. Not getting hourly oversold. So again, I wasn't looking to play any kind of trade, and scouting a daily higher low, anything above 1951. And the bulls have a good amount of space for that to form. Just keeping an eye out for the potential of a Bitcoin weekly lower high, but scouting an MARA higher low. CCJ, gap up open into profit taking, another name of scouting a daily higher low, but the consolidation only just began. We are not close to hourly oversold. So again, these are names that I'm still keeping an eye on, and I'll be watching tomorrow for potential daily higher low entries. But again, staying a bit picky on a day that it is as red as today. And again, it wasn't, you look at the percentages, SPY is only down 0.5%, but you have to remember that we came from the gap up open. So we already dropped 1% just to get to the close of yesterday. So really, it was a 1.5% drop from that pre-market high. So that is where we stand. Bears getting a little bit of momentum in their favor. We'll see how we close out the week. If you're losing clarity on the daily time frame, if it's just getting a little too choppy for you, with the SPY a little higher low and then higher high and no follow through, you're either looking at the futures charts or you're sticking to the 2-day time frame. You can zoom out a little bit, and that makes it a bit more clear as far as nice and condensed candles and clearly not changing any trends on the 2-day time frame at this point. Or the weekly. We know we're just looking for a weekly lower high to be the result of this bounce. And it's just a question of, is it shaping up yet or not? So that's where we stand. And now we'll end with a little bit of garden lessons in charts and technical analysis. Looking forward to some more outside content now that the weather is turning. Do good things. Have a good rest of your day. Hey everyone, we're going to do some lessons from the stock market today, visualized with seed packets because it's spring and I'm pumped to be outside. So it's important to also recognize that as spring and summer come, I personally change my trading style so that I am at the computer less. I know I want to be done earlier in the day. I know I want to set stops and let some trades play out, but for the most part, it's a much more short-term window that I'm looking to trade in. But as far as today's lessons, I want to make sure we're on the same page. Those of you that I'm following for a long time know that gap ups are not for buying. So we had a gap up open today and we dropped real hard all through the morning. So gap ups are the time where people who have FOMO are buying, and it's often at the top. I won't even buy a gap up open when we're in a monthly, weekly, daily uptrend. It's generally a time to be looking to sell longs or a time for aggressive bears to be looking short. And if you have long swing positions that are open, you're looking to go bearish to potentially protect any consolidation that occurs. Most recently, in the past couple of months, when we've been in a weak market with a weekly and daily downtrend, it's been a very high probability trade to short gap up opens. And again, it's just the kind of scenario where you find a level to play off of, and even if you wait 5 minutes and then you have a high of the day to act on as resistance, that level is now your stop, but you look to position for consolidation on the gap up open. Another thing that happened multiple times today were 1-minute stair-step patterns. We had a bullish reaction to the market from the lows, right near the lows, in response to the potential that we've got a third round of talks between Russia and Ukraine. So the 1-minute time frame was setting a higher low every single candle on that news reaction. As soon as that 1-minute stair-step pattern was lost, that marked the top, and we pulled back significantly. There were 2 examples today where stair-step patterns were great bearish entry opportunities. My style of stair-step is I make a bearish entry. On the initial pullback, I sell half. I stick my stop under the high, or I should say above the high, and then I let it play out. And if we keep pulling back, I've got a nice profitable position. And if we do see continuation and the trend goes to a higher high, then I stop out with a very minimal loss or a break-even loss. So this happened multiple times today, and as long as it keeps working, the bears are going to keep taking those entries. That's something that's very important with the market, and that's why trends are so key. If something keeps working, the market participants will keep doing it until it no longer works. Next, we had the S&P 500 had a 4-hour little cup and handle on the futures chart, and so did the NASDAQ. And pre-market at about 9 a.m., bull breaks occurred, and we broke out to higher highs, the highest prices, the highest levels that we've seen on this entire bounce. Then we had no follow-through. I ran out of seed packets, but we would have dumped down to fresh, lower lows. So Bitcoin at that same point in time was very correlated, but it was much weaker. We were bouncing on the 4-hour time frame, and we were not close to our recent highs. So we could look at that and say, Bitcoin is not nearly as strong as the market. It's not positioned well if the market were to consolidate from here. And so I saw that Bitcoin was weaker than the broader market and said, I am anticipating a 4-hour lower high to be the result of this bounce unless big time volume shows up out of nowhere. And in the end, the lower high was set and we rolled over into significant further daily consolidation. And the clue was we were weaker than the broader market. So of course, when the broader market rolls over into a weak red day, Bitcoin, which was already weaker, rolls over even further.